everyone, welcome. It's 11 o'clock, so we're going to get started. My name is Maria Gambacorda. I am going to serve as the host today, and welcome to our webinar, PPP Round 2, Get Your Applications Ready. Before we get to introductions and I turn the program over to Corey, I'm going to go through just a couple housekeeping items. Excuse me, the webinar will be recorded and we will share a link with all attendees. Once it's on our website, give us a few days to process that. We'll share the slide deck along with the recording as well. So again, you'll get a follow-up email. We are offering 1 hour of CPE credit for this webinar. So therefore, all polling and survey questions need to be answered. We have 4 polling questions, and for CPE purposes, you're required to answer 3 of those 4 questions. You'll be prompted for each, and we will share the results. At the end of the webinar, there will be a short survey. If you could please complete that, it will launch automatically. And again, this is a requirement for those needing CPE credit. Okay, next is the chat and Q&A box. Both chat and Q&A are opened. If you just have a comment, if you could please include that in the chat. As for questions, you can put those in the Q&A box. And we are going to hold all questions till the end. We have 30 minutes of technical content and then 30 minutes for questions. So we should have enough time to get to everyone's questions. So again, you could add them to the chat as you think of the question. The CPE certificates will be emailed to everyone by the end of January. We have some related technical content articles regarding the PPP round 2, so I will share those in the chat in a few minutes. So I am going to, that's it. Any questions, you can communicate with me via the chat. And I'm going to turn it over now to Corey Van Duzen. Corey is a partner in our tax area. He has over 15 years of experience in tax matters for businesses with a focus on business development incentives. So Corey, take it.
Thanks, Maria. Appreciate it. And wanted to welcome all the friends, colleagues, clients, prospects, just general acquaintances of Lumsden McCormick to the webinar. We really hope that this helps you in determining what PPP2 is all about, whether you're eligible for it, how you apply it, and maybe quells some of the fears and questions that you may have regarding PPP2. Got a great team of individuals here. Megan and Jenna have been rock stars throughout this whole process, and they become PPP experts overnight. And I don't know whether they wanted to, we might have forced them to do it, but they've been doing an excellent job and helping out many people on the call. What I do ask is that we will try and get to all the questions that we can. If we run out of time, we will follow up with question and answer questions either via email or call us. Our contact information is on the screen now. And know that we are trying our best. I think the guidance dropped a couple of days ago at, Meg, what time at night did it drop? Was it 9 o'clock, 10 o'clock or something like that?
Yeah, every night. So like Wednesday, I think the 2 IFRs dropped at like 11:30, and I don't know what time the applications dropped on Friday, but it was definitely after like 4:30 p.m.
Yeah. So we're trying to do our best to digest this and help everybody. And I think we've been through it once before. I never thought we'd be going through PPP again, but here we are, and we want to help you out. So with that, I got Megan Morris, who is a member of the tax department. She's a tax manager in the tax department, and overnight she has become a PPP expert. I also have Jenna Torella here, who is a member of our audit department, and she is co-chair of our PPP extraordinaire team along with Megan. They are the ones that know everything. I know nothing, and Maria's probably scared that I'm going to say something silly or crazy, so I will try and shut up now. and turn it over to the ladies with all the knowledge.
All right, thank you, Corey. So just to briefly touch on what we're going to go through today, an overview of the bill, how we got here, where PPP2 came from, eligibility for the new program, loan calculation and documentation, the forgiveness process, tax implications, and then as Maria mentioned, we'll leave a lot of time for questions, any comments, and we will address those after we get through all of the technical content. So to start off with polling question 1, your prediction for Saturday's football game. Who's winning, Bills or Ravens?
Everyone see my prop? I always bring a prop.
Okay, I'm going to give it another second. I'm going to end the poll and we'll share the results, and no big surprise, the Bills overwhelmingly are going to win.
All right, so getting right into the PPP content, how did we get here? The Consolidated Appropriations Act of 2021 was passed by Congress on December 21st, signed by President Trump on December 27th. The bill is over 55 pages long, so we're really focusing on just a few of the items in this list below and really focusing on PPP today. But within that bill, we saw the expanded employee retention credit eligibility, second draw PPP loans, shuttered venue grants, and additional and/or extended credits that are now available. So who is eligible for the second draw? Second draw loans are available for select eligible borrowers. There's $284 billion set aside for PPP funding specifically, with $25 billion set aside for borrowers with 10 or fewer employees or loans less than $250,000 for borrowers in low income areas. So in order to be eligible, you must have under 300 employees. This includes all employees. If you do have multiple locations, there is not more than that. The requirement is that there's not more than 300 employees per location. You also have to be able to substantiate a 25% drop in gross receipts in any quarter in 2020 compared to 2019. And you have had to use or will plan to use 100% of the first PPP loan that you received. A couple important things to note here: you do not need to have applied for forgiveness or have your first loan forgiveness approved before applying for your second draw. You just have to be able to know that you will use it or have already used it. And then you do still also have to certify that the economic uncertainty makes the loan necessary to continue your business operation. So you do need to be able to substantiate that you do need that second loan. There are some newly eligible organizations. So these would be your first draw borrowers, 501c6 and destination marketing organizations were added. No more than 300 employees for those organizations, and no more than 15% of its activity is lobbying. So this is related to receipts and activities up to a maximum of $1 million. Also, some newly eligible organizations would be housing cooperatives with 300 employees or less, as well as stations, newspapers, and public broadcasting organizations. And that employee threshold is 500 employees or less. There's $35 billion set aside for just these first-time borrowers. So there is specified money for newly eligible organizations. Just to touch on some of the ineligible organizations, just a brief list: publicly traded businesses, any entities affiliated with the People's Republic of China, any entity in which the president, vice president, a head of the executive department, a member of Congress, or their spouse owns at least 20% of the economic interest of the entity, any person required to submit a registration statement under the Foreign Agents Registration Act, and then any entity receiving a grant under the Economic Aid to Hard-Hit Small Businesses, Nonprofits, and Venues Act. So that shuttered venues grant that I had previously mentioned, You cannot take part in both programs. You'll have to choose one or the other. And then businesses not in operation on February 15th, 2020 are also not eligible for PPP. So we're going to move on to polling question number 2. Please select yes if you wish to earn CPE credit and receive a CPE certificate for attending this webinar.
I was trying to vote and I realized panelists aren't allowed to vote.
We're going to give this another second, everyone. Thank you. Thanks, Jenna. Wow, it's 50-50. Okay, last chance. I'm going to close the poll at 30 seconds here. Here we go. And no need to share these results. So Jenna, you can go ahead.
Thanks, Maria. So getting into a little bit more of the detail of what are gross receipts, how are they being calculated, what quarters are going to be used. So to start off, the guidance is saying that gross receipts is all revenue in whatever form received or accrued. It includes sales of products or services, interest and dividends, rents, royalties, fees and commissions, and then this is all then reduced by returns and allowances. The gross receipts will be calculated in accordance with the entity's accounting method. We're taking the understanding that this would be the financial statement method, but again, as Corey had mentioned, the guidance is still new. We're still understanding it, and there may be additional guidance to clarify how that will truly be recorded. So then what is excluded from gross receipts? Specifically excluded from gross receipts would be any proceeds from PPP round 1, any EIDL advances received, net capital gains and losses, taxes collected for and remitted to a taxing authority if included in gross or total income of the borrower, proceeds from transactions between a borrower and its domestic or foreign affiliates, and then any amounts collected for another by a travel agent, real estate agent, advertising agent, conference management service provider, freight forwarder, or customs broker. So these will all have to be backed out of your calculations to compare your quarterly gross receipts. This will be calculated using any quarter in 2019 compared to 2020. So you do not have to meet it for all 4 quarters. You can satisfy the requirement of the 25% drop using one single quarter. You do have the option to use an entire year. So if you were in operation for all 4 quarters of 2019, you can do an annual comparison. The thought process behind that is if you're showing an annual reduction of 25%, there's got to be a quarter within that year that has that 25% reduction. So in order then to substantiate that, you'll submit annual tax forms or financial statements to substantiate that revenue decline. So calculation of the loan. This did not change significantly from the initial process. It's 2.5 times the average monthly payroll costs. You have technically 3 options to use: 2019, 2020, or the 12 months prior to the loan application. With how quickly this program is moving, we're thinking that this 12 months prior to the loan application will still be your 2020 calendar year if you're applying by the end of January. The loan is capped at $2 million per borrower, or capped at $4 million for businesses that are part of a single corporate group. If you're a seasonal employer, you can choose any 12-week period from February 15th, 2019 to February 15th, 2020. And for any entity that did not exist before the 1-year period preceding February 15th, 2020, the average payroll is determined based on the months the company had payroll. One new part of PPP2 is businesses with a 72 code are eligible for 3.5 times the average payroll rather than 2.5 times. So this is really the accommodation and food services. So it will be that you're eligible for a little bit bigger of a loan for PPP2.
Jenna, I'm going to interrupt for a second here. I noticed a bunch of people adding questions to the chat. If you can move them to the questions and answer, that way we can log them correctly and get them to Megan and Jenna and Corey at the end of the technical session. Thank you. You can copy and paste them over to questions. I can't do that. Otherwise, I would do it for you. Thank you.
So then looking at the average monthly payroll cost, your payroll costs again include gross wages up to $100,000 per employee. This is the same as the original PPP program. Also includes employer health insurance premium. The guidance did clarify that this includes group life, disability, vision, and dental insurance. So those would all be included in your health insurance premiums. And again, that is the employer portion. Also included in payroll is the employer retirement plan contributions and state and local taxes on compensation, again, employer portion. For 2019 self-employment earnings for partners or self-employed owners, that again is up to $100,000 per person. If you're using the same time period for the initial loan draw for this as the second, you will not need to submit any additional payroll documentation to the bank. The SBA is under the assumption that the bank has all of that information for you already and should be able to just pull that information for the second draw. So second draw documentation. Like Megan mentioned, late Friday night, the SBA released Form 2483 SD, which is the Paycheck Protection Program second draw borrower application form. So this is where you're going to put all of that information for the new loan. But again, similar to the first round of PPP, we're expecting the banks to have their own portal, their own setup to make sure that they have all of the information they need and everything will be done online. And as I mentioned, if using the same payroll period and same lender, no additional documentation to substantiate payroll is required. But if you are switching to 2020 payroll, if your payroll did go up or you are eligible for a larger loan, you will have to again submit that payroll documentation to prove the average of the 2.5 times your payroll. And then the other thing you'll have to submit is the substantiation of revenue decline. So if your loan is below $150,000, you are technically not required at the time of filing your loan application to submit this documentation, but you are required before the time of your forgiveness application to submit this documentation. We are recommending that you do gather the information and make sure that you do actually qualify and there is a quarter or the entire year that you did reduce gross receipts by 25%. So polling question 3, do you plan to apply for a second round PPP loan?
Give it about 5 more seconds, everyone. Okay, I'm going to end the polling and I will share the results.
So it looked like based on our poll, we're right about almost 50% of people that are looking to apply for this second round versus people who aren't. So applications for this do open starting tomorrow for the second round, but the SBA, due to a lot of feedback and probably negative press associated with the last round, is doing this in a more targeted approach. So starting Wednesday, it will really only be for community banks and small, certain people that can apply for this second round. And then other banks, for example, that are a little bit larger, like maybe like an M&T or like Bank of America, any of the big banks, they'll be opening up their applications in a few days once the SBA kind of gives a smaller, some of those smaller borrowers a chance that maybe don't have the resources to be able to pull as fast together. So now that Jen has kind of gone through mostly this next new round, I'm going to kind of go over some other changes that occurred in the PPP world as a result of this new act that was just recently passed. So for any borrowers who returned all or part of their original loan, they are allowed to apply for the difference. Now that this PPP program has opened back up, if they need those original funds and maybe they don't qualify to apply for a full second round of funding, they are allowed to apply. The SBA has 17 days from the passage of the act, which was December 27th officially, to provide additional guidance. So hopefully this week we'll see some additional guidance on anybody that returned all or part of their funds and want to get the difference back. Also, throughout this whole entire process, there's been a lot of changing guidance. Most of the time, I think that's been favorable, but if anybody had an original loan and doesn't qualify for the second amount, and they're under the changing guidance, their loan amount could have been adjusted to be higher. Even if the loan was already fully dispersed, they are able to apply for that increase in loan amount as well. So if you think any of those situations apply to you, I don't think it really applies to many of our clients, but please feel free to reach out and we can help you get set up to make sure that you get the funds you need if PPP round 2 is not an option. So for some changes to forgiveness on a kind of high level. So now all loan recipients can select an 8 or 24-week covered period. Originally, based on the Paycheck Flexibility Act, there was only loans after June 5th. Those could do the 8 or 24 weeks, but now any PPP loan that has been issued can use an 8 or 24-week covered period, including this new round that will be launched. It also expanded some of the eligible expenses that you can claim for forgiveness. So I'll go over that in a little bit, as well as there's a new simplified forgiveness application for loans of $150,000 or less. And I'm going to touch on that as well. And one additional thing is the EIDL advance. So the original $10,000 forgivable advance that some people originally got back in March or April, that went very fast. That is no longer subtracted from the forgiveness application. The SBA, if you already filed for forgiveness and reduce your forgiveness by the EIDL advance, is supposed to go through a process and your lender should be contacting you about getting back that additional $10,000 and getting that forgiven as well. So I would maybe give a couple weeks if that situation happened to you, but the SBA should be reaching out to your lender and your lender should be then reaching out to you to make sure that that piece is forgiven. But please let us know if you're having any difficulty with that. All right, so to kind of take everybody back a little bit. So the original forgiveness eligible expenses with your PPP loan, and this applies to both round 1 and round 2, were payroll costs, which Jenna kind of went through earlier with what qualifies for that. Any business mortgage interest on real property existing before February 15th, 2020, no prepayments for that. Rent or lease payments for real property for leases in effect as of February 15th, 2020, or any utility costs for services that began before February 15th, 2020. Those were all originally eligible. I know a lot of you have been on our previous webinars before kind of going through that, so that shouldn't be any sort of new information. However, this act expanded what expenses we can use for forgiveness, and this applies to both round 1 and round 2. So if you haven't applied for forgiveness yet for round 1 and you need some more expenses, you can use these as well. Keep in mind that the 60-40 limitation, so 60% of your loan for maximum forgiveness has to be used for payroll, that is still in effect. And then 40% can be used for any of these other expenses, as well as the rent, mortgage interest, and utilities from the previous slide. So now there's a new component for covered operational expenses, and what's included in that is payments for software or cloud computing services that facilitate business operations, product or service delivery, the processing, payment, or tracking of payroll expenses, human resources, sales or billing functions, or accounting or tracking of supplies, inventories, records, and expenses. So those are basically kind of like operational software costs can now be claimed for forgiveness. Covered property damage. So I hope that this doesn't really apply to anyone out there, but what this is specifically for is anybody that experienced property damage or vandalism and looting due to the public disturbances over this summer for the summer of 2020 that were not covered by insurance or any form of other compensation. You can claim those costs for forgiveness. Covered supplier costs. So for this, it would be any expenses incurred by a borrower under a contract or order in effect before the date PPP loan proceeds were dispersed for the supply of goods that are essential to the borrower's business operation. So there has to kind of be an existing contract in place that was recurring. So for example, if you, always get a recurring order from a supplier and you might not have really needed all those supplies or anything like that, and you still got that supplier order, that's kind of where this would be applied for. We're probably waiting for, maybe a little bit more guidance to clarify this, but you still have a lot of time, even if you haven't applied for forgiveness yet with round one, to sort of wait for additional clarification to come out on what this is. There's really no rush to apply for forgiveness. Also, we can include covered worker protection equipment. So any costs of PPE incurred by the borrower to comply with rules or guidance issued by the Department of Health and Human Services, OSHA, the CDC, or state or local governments that you've needed to either bring employees back to work or allow your business to open to outside customers and vendors. Any of that, you could claim those costs as well. So with that, I'm going to move to our next polling question of if you will be using your PPP loan for any of these newly eligible expenses and claiming those on your forgiveness application.
I usually allow for about 25-30 seconds on these polls, so we have a few more seconds here and I'll close it out and share the results. Okay, we'll share the results.
Okay, so it only looks like about 37% of you will be using these. I think a lot of these expenses that you look at either don't apply or people kind of already made sure they got forgiveness, because this law was pretty much passed after a lot of people already used their PPP-1 proceeds. So unless they need to adjust any expenses or anything like that, they are not applicable anymore. So there's also a simplified forgiveness application that has not been launched yet. It's supposed to be released by the SBA within 24 days of the act. So we're only about, I think, 14 or 15 days out now from the passage of the act. So we still probably have another week and a half or so to go. And this simplified forgiveness will be for loans under $150,000. And it'll be a one-page form where you basically will have to make a few certifications that include that you complied with the PPP program requirements, what your loan amount was, the number of employees that you retained due to receiving the PPP loan, and an estimate of what you spent the loan on for payroll. And so with this program, you will need to retain the records for 4 years for employment and 3 years for other records. So even if you don't have to submit a lot of documentation with this application, it's supposed to be very streamlined and easy. We're still recommending, that you keep all the files that you use, that you complied with the PPP program in your files if you are going to use this simplified application, just to make sure that you're covered in case the SBA would ever come and examine your loan, because they can still examine your loan even with this small forgivable simplified forgiveness. And once again, I guess just a reminder that I said it would be released in a week and a half, then the banks are probably going to take this application and they're going to put it into their online portal. So I would expect to kind of see something by the end of January, maybe early February, if you want to get your application submitted and your loan was under $150,000. That's probably the timeline I would expect to see something start to be released by banks. And then I guess the last thing, probably ending on a high note here, is one of the great things about this act was there was question whether these expenses were going to be allowed to be deducted. And this act clarified that the original intent was that the loan was not included in taxable income, and any expenses that you claim for PPP forgiveness can be deducted. And this is effective all the way through for PPP round 1 loans. So they made it very obvious that Congress's intention was for this to be a tax deductible, tax-free program at the federal level. We are still waiting to kind of hear from some states on what the state tax implications of this are. A lot of states automatically conform with the Internal Revenue Code, but that doesn't mean they won't decouple and say that this is taxable. You know, there's some hard hit states like California or New York that have already kind of been talking about budget implications and shortages. So who knows if they will decide to make this taxable as a way to increase their state revenue. So, you know, we have until January 15th to make a lot of personal estimated tax payments. So we're probably working with you just to make sure that we adjust any payments or consider that as needed, because we don't really know what will happen. Also, there was any fiscal returns over the summer, so we might have to, usually we extended a lot of our returns here, but if you did file and pick up that taxable income, you might need to amend the return. And then for S corporations and partnerships, this is treated as tax exempt income and would increase basis, and then you also get to deduct the expenses. So PPP is a basis neutral event if you own an S corporation or a partnership. So with that, that was kind of all the technical content we had. But right now we are going to open it up to questions. And I know I've been seeing a lot of questions come through. So Corey, I'm not sure if you want to take it away and start asking us questions. And feel free to send in your questions. We really do want to help you as best we can.
Definitely. Thanks, Meg. Thanks, Jenna. That was very informative and lots of good information in there. And I almost unmuted and interrupted you when you were talking about taxability and said, woohoo, that made everyone's lives easier. And there was a lot of misunderstanding about that. I think we actually did a webinar on that. So I'm going to go in order that the questions were asked. The first question that is in the queue says, does unrealized investment gains and losses used in the gross receipts calculation?
No, capital gains and losses are not included.
Yep.
So
and unrealized gains would not be either. I think those are included. I'm a tax guy, but I think they're included for financial statement purposes as like an adjustment in equity or something like that. So yep, nope, that is not included. Next one is, hi, Jenna. I guess this one's for you, Jenna. Even if a 501c3 organization does not have employees, does it make sense to apply for funding? Thank you.
I would say no, because the application is based on payroll. So you would have to have that payroll number to be able to determine a loan amount.
Sounds very logical. This one says subcontractors do not count in the employee count. Correct. That is a correct answer.
Correct.
Fun. Do you have to have received the first PPP to apply for the second PPP loan?
So you wouldn't be applying for the second loan. You would be applying as a first-time borrower as long as you meet the requirements. And actually the application window for that opened yesterday, starting at the smaller community type banks. So you can reach out. I would recommend just reaching out to your lender. That's how we've probably seen the most success, is working with an existing relationship that you already have. If you don't have a relationship, reach out to us. And, you know, we've had some success hooking people up with various bankers to help them get their PPP loans.
Yeah, I think some of the toughest were some self-employed individuals and sole proprietors that maybe didn't have a banking relationship set up. I actually had one client that was able to go to an online banking company that was accepting new clients and get a PPP loan. So that's an option out there if anybody's in that situation. Megan, one thing I saw in the slide deck, I think you covered it. This was interesting to me. And I think there were some people that were pretty conservative on their first PPP draw. It appears now that if you were conservative or you didn't have guidance, so you went with a lower number, if you actually were eligible for a higher number, you could go back and amend your application and get additional PPP funds under the first draw. Is that correct?
Yep. One thing I just caution with that is part of getting a second draw is that you certified that you used all or part of your first draw. So if you were to go and apply for an increase in funds, that increase in funds would technically need to be used before you can apply for round 2. I'm willing to guess that round 2 would be bigger than any increase from round 1. So I would recommend going after that first, because these funds are first come, first serve, but you can take into that guidance in your round 2. So your round 2 amount could be higher than round 1.
And for the 50% that answered they are not going after PPP round 2, if you go after round 1 and there was something that you could get a spike in, you might want to think about that. Here's an actual question. Sorry, that was from the mind of CBD. Under the first PPP round, is the EIDL advancement payment now being forgiven? Our bank still hasn't removed it.
Yes, so those are, I mean, my guess is that this is all pretty new. You know, everybody's kind of scrambling to update their systems. So especially if you already applied for forgiveness, I can't remember what day, whether it was Wednesday, Thursday, or Friday last week, but the SBA did kind of come up with some guidance for how banks are supposed to go about refunding that EIDL advance, or kind of adjusting the forgiveness terms to account for it. So I would just maybe be patient, give it maybe this week. If you don't hear anything from your bank, you can always reach out to somebody there. Things will be updated. Just everybody, you know, we're all on this journey where we're building a plane and flying it at the same time together, banks included. So
I love that saying, Meg. Yeah, I mean, this is, I know probably people in the audience are a little frustrated or confused about this stuff, and we feel the pain. I mean, this just keeps changing, and we are trying our best to help everybody, because I think it's only good for the community if we get funds here to help support the businesses that need them. All right, next one. I like this question. How do you substantiate that you use the first loan and need the second loan? Would one way to do it be a signed affidavit? What backup would be necessary? Regular payroll that you showed on forgiveness application, question mark. So I think we're talking about, how do you document that you actually used all the first draw?
yeah, so right now there's just a certification on the application, but I would think that if you submit your forgiveness application, you don't have to submit your forgiveness application to apply for the second round. And I'm not sure if the second round forgiveness application will include any support or anything like that. But it's just a certification for the application itself. And then I would make sure that you apply for full forgiveness on the first round before you apply for full forgiveness on the second round, just to kind of show that you can show an application, and especially if it goes through the process where it's fully forgiven by the SBA, that supports that you use that full first loan.
Thanks, Mike. Next one. Do gross receipts include state grants or other types of pass-through government funding grants?
I believe that would be included in gross receipts. There's not been a ton of guidance on nonprofit gross receipts, but just based on the general definition of gross receipts, I would think that would be included.
Thank you. Is it strictly calendar based? Must a quarter be Jan 1st to March 31st, or can it compare March 1st to May 31st, 2019 to 2020? So this is a great question.
So this is an area where we're still waiting on some guidance on, because if you look at it, it just says for calendar year 2020 and a quarter in calendar year 2020. It doesn't really ever specify that it has to be a calendar quarter. So if you are a fiscal year filer, we're kind of still waiting to see guidance as to how they want gross receipts based on the fiscal year filers. For right now, I mean, I wouldn't, if you're a calendar year taxpayer, I don't think it would make any sense to use a fiscal year quarter to qualify. But if you are a fiscal year filer, and I would say that you could use a fiscal quarter to substantiate. Jenna, would you agree?
I would agree with that.
Meg, what did you teach me last night? You taught me that if there's something that's uncertain, there is guidance that says rely on the guidance that you have, make an educated guess, document your position at that point in time if it's a gray or unanswerable question. So,
and I would add to this that even the AICPA has cited that this is still kind of an area that needs to be clarified. So there's people that are interpreting it that it's only calendar quarters, and there's people that are saying fiscal quarters would make sense as well. So it really kind of is a gray area, and we do sort of have that safe harbor that based on the guidance at the time, you can apply based on that guidance. So as long as you kind of justify why you're doing what you're doing, you can apply that way if it works for you.
Yeah. And I think I've done this on every PPP webinar, and I say, take a time out, take a step back, use your judgment, and document what you're doing and why, and go forward with the application using that answer that you have. And I think you're fine, and you'll be okay in that terms, because we've had to do a lot of educated guessing, and the educated guessing that we've done through this process has worked out. And there have been times when we've had to pivot after guidance has come out later on. It's just the nature of the beast, unfortunately. All right, next one. Can you please discuss the revenue calculation used for nonprofits in determining the 25% quarter-to-quarter loss? That sounds like a Jenna question.
It is, and it is one that we are hoping for more guidance on. Currently, it states that the guidance is based on IRC Section 6033, the definition of gross receipts contained in there. But until there's more guidance, a little bit more clarification, I would follow the standard gross receipts that we've talked about, excluding those capital gains, unrealized gains and losses, excluding any affiliate receipts, but really taking into consideration your general gross receipts that you receive in the regular course of business.
Thank you, John. Next one, to clarify, is the loan capped at $2 million per employer identification number?
So yeah, so this new loan is capped at $2 million per EIN. If you file under consolidated group or you have a bunch of related entities, the max that you can get is $4 million. And you also have to keep in mind that the total cap, so originally each borrower was only able to get a maximum of 10 million. So you can't get a round one and round two. So say your round one was 9 million, you would only be able to get 1 million this time to be able to take you up to the 10 million. And as a group, you can only get a maximum of 20 million for both rounds. So I don't think many of our clients will be anywhere close to hitting those limits. Some might come a little bit close, but most of them are not that large, I would think.
And if you do get a loan that big, your name's going to be in the paper.
Yes.
Business First will make sure of that. Next one. This is a good question. Any quarter, any 3-month consecutive periods, ? Calendar quarters eliminate a lot of companies who were hit hard at the close down through first PPP distribution, idle advance, March, April, May. This is a really good question.
Yeah, so I guess just also when you're determining your gross receipts for like Q1 and Q2, just make sure you're not including the PPP proceeds and the idle advance in your calculation. They've come out clearly and said that that is not included in your gross receipts.
Can we use, I think it's really asking, can we use March, April, May as a 3-month period
so right now I would say until we get guidance, our options are if you're a calendar based filer, so you file on a year end of 12/31, you should be using your normal traditional quarters. If you're a fiscal based filer, you could look at your fiscal quarters. And I think you also right now, possibly on guidance, could use calendar quarters because that area is still very gray. But if you're a calendar year filer, I don't think that you'll just be able to say, here's my 3-month window and here's my 25% drop. I don't really think with guidance that there's anything that would substantiate that now.
But there's no definitive answer on this, it sounds like. Right?
Correct.
Yeah. So I go back to this one because I was actually thinking about this is this is going to be first come, first serve again, I think, ladies, right?
Mm-hmm.
So if we don't know 100% sure, my recommendation would be if that's the only way you qualify and that's when you were hardest hit, you don't have that 25% drop in a calendar quarter, and that's only 25% drop quarter. What I would do is I would submit an application, I would disclose it, and then if you get funds at some point, you pay them back if you figure out you were wrong and guidance comes out. So again, rely on the guidance that is out there. But the important thing is get in line now, and if you need to, you just pay it back, or you don't take the draw when you actually close on the loan. Those are options. And when we were in a sticky situation like that under the previous draws, this was the exact same advice that we gave. Would you ladies think that's logical?
I would agree with that.
Okay, cool. But yeah, that's one of those ones that you probably don't know. You may never know the answer to.
But also keeping in mind too, you do have to certify your economic need ultimately. So I would make sure you document your economic uncertainty. I think when you're starting to get to like choosing weird months to calculate your drop, like do your numbers, what in addition to your numbers helps support your need for that economic uncertainty? And I would make sure you document that.
Agreed. Next one, can the payroll amount be based on 2020 payroll?
Yes, it can be if you are choosing to not use, if you're a second time borrower that used calendar 2019 for your first draw, you can switch to 2020 if that is more advantageous. We do just remind you that you will have to include all of that payroll documentation with your application the second time around.
And so the reason you would want to do this, and just kind of like the layman terms in case it's not obvious, if your 2020 payroll was up, that's when you would want to recalculate your loan.
But we had no payroll in 19 and payroll in 2020.
Yeah.
Same thing. Okay, good. All right, next one, the loan request will go through the lender/bank, question mark.
Correct. It'll follow the same process that the original PPP program. You'll go through your lender. They'll have their own online portal to submit all of the information to apply.
Next one, for the SBA Form 2483 SD application, how are we to calculate headcount? By headcount or FTE?
So that number of employees question is pure headcount. It's not an FTE calculation. It's to make sure. So the 300 employee test, that's if you go 1, 2, 3 employees, it doesn't matter whether they work 1 hour or 60 hours a week. It's just pure headcount.
Thank you. Next one, will Lumsden be using the AICPA portal for PPP1 and PPP2?
So there is an AICPA portal. Since a lot of our applicants, their loan amount is going to be the same as the last time, we're not really using that portal right now because it kind of looked like it forced you mostly into a specific like biz to credit lender. There was other ways, but you had to kind of pay for it. So for us, with our sense, with the number of people that we're going to be doing, we're kind of going to be sticking with the process that we knew from last time. There's not going to be as many applicants this time, and our process is very streamlined internally. So that's kind of why we're sticking with the system that we knew that got us through in March and April. And I don't really think we had any clients that, maybe some clients that the banks were a little bit slow, so they missed out on the first funding, but they definitely got funding once the government increased the loan amounts again. And I don't think it was due to our delays from that side. I think it was just that banks got a little bit overwhelmed last time and the funds went very fast. But this time, given the cap on the loans and stuff as well, I think the money will go, but the amounts have to be smaller. And I don't think you're going to see those big publicly traded companies that are walking in to get $10 million loans right away through the large banks very fast.
Yeah, I think to comment a little more on that, the first one, I think was really, there was a confidence crisis nationwide. We had no idea what the heck was going to happen. Everyone thought everyone was going to go out of business, and they really pumped money into the economy to help support the psyche of businesses and try and prevent some layoffs. To me, this one now, we've kind of stabilized in terms of some businesses were hurt really bad. Some businesses are treading water. Some businesses are doing better because their product is more is in more demand during the pandemic. And this round of PPP funding is really targeted for businesses that have been hardest hit. So yeah, this kind of makes sense. Instead of just doing everyone, there's going to be less people, less applicants. The funding should should be utilized much slower, but still get in line as quickly as possible. Is having unused idle proceeds an impediment to applying for round 2?
I don't think that is specifically addressed in the certification that Megan had been talking about. It's really talking about using that first round of PPP. I haven't seen anything about unused idle funds, but Megan, if there's anything you've seen.
No, I haven't. I think it's really just making sure, if you can't stick your hand out for more PPP loans if you didn't use your first loans. I think
Right.
that's really what that certification is for.
Mm-hmm. And you can't double dip on any programs with payroll. So if the payroll that you got forgiven on in the first one or the end of the idle, you're trying to use that for this one, you can't. So
and now too, if you're going back and you're going to take the employee retention credit, which we're going to be doing another upcoming webinar on for more information on that, because originally PPP borrowers weren't eligible for the employee retention credit, but they are now. You kind of gotta make sure you're using wages for one program at a time. You can't say I'm using this for a grant, PPP, and idle advance, and also FCRA wages. You can't do all that for the same dollars.
And Meg, or Jenna, question for you: if there's people in the audience that have no idea what the heck you're talking about with the employee retention credit, because everybody thought it was dead if you took PPP, have we missed out on anything at this point, or can we go back and make sure we look at everything and get any employee retention credits that people are eligible for?
So you haven't missed out on anything. We'll be able to kind of go back, and also there'll be a new credit program for 2021 that you'll be able to kind of take advantage of going forward, possibly as well if you qualify. So be on the lookout for that upcoming webinar. We plan to do it at some point before the end of this month. So we're probably be scheduling that after this webinar. We wanted to make sure we kind of focus on PPP round 2, since that has the most time advantage or time sensitivity, and the funds are first come, first serve. So we want to make sure we get everybody through that hurdle first before kind of working on the thing that's kind of eligible. You can apply and adjust for it as needed.
Maria, if you're still on, what are your rules on going past noon? Because we still got 32 open questions. I mean, I'm fine with it if our panel is fine with it.
Yeah, we can certainly stay on. There's no time limit. So if everyone is interested and has a question, we've got about 8 minutes left. You can hang on and we'll go through the questions.
Thanks, Maria.
Yep.
Can it be booked at a segment versus can it be looked at by segment versus total? For instance, our mobile operations dropped 100%. So yeah, you got to look at it at the macro level, or can you look at each individual business segment?
So it's based on total gross receipts. So you got to look at everybody together.
For PPP2, are you able to choose a covered period between 8 and 24 weeks if you only need 10 weeks to use the funds, and then be able to look at ERC?
Yes. So, I mean, in this case too, it doesn't really matter if you choose a 24-week cover period. The bank only has to review the expenses that you submit. So you would be able to, as long as you account and clearly document, the key with this is document, that you're not double dipping any wages for PPP purposes and ERC purposes, you should be fine. I think a lot of banks, even though the guidance said that you could kind of apply between 8 and 24 weeks, most are kind of pigeonholing people into 8 or pure 24, but you only have to submit the expenses that you want to claim for forgiveness. And we've seen a couple forgiveness applications go through that did that, and no questions asked by the bank. So that's totally fine.
Nice. First draw PPP loans in 2020 less than 150K can now file the short form question mark, or is this only first draws in 2021 and second draw?
So that if you originally got a loan that was under 150,000, you can use the short form. It's not published yet, but once it's available, you'll be able to use that.
Under 150K, what do you need for documentation for forgiveness?
So I think Megan briefly talked about this process, and there is no documentation required to be submitted. It's just a certification that you were in compliance with the PPP requirements, the number of employees you were able to retain, the estimated amount used on payroll, and then the loan amount. So it is a much simpler form to fill out. It'll just be a maximum of 1 page.
Just as a group of accountants here, you know, and being your advisors, I would just recommend make sure you keep that documentation. You're supposed to keep it for if you have payroll for 4 years. So let's just call all of it 4 years. Just keep, even if it's just a payroll register for the period of your covered period with, you know, your supporting payroll tax documents, make sure you keep that somewhere specifically for your PPP, just to kind of cover yourself in case you don't necessarily have to do all the calculations, but just keep something that, you know, you certified with the program while you originally applied for the loan, just so it's there in case you need it. That way you're not scrambling down the line, because it's a lot harder to recreate than it is just to have it from the get-go.
This is a good one. I am with a company that is eligible, but is going through a potential sale in about a month. Asset transaction. A new co is being set up, I assume, by the purchaser. Would the new co be able to apply, or should the existing company apply pre-sale, but would that complicate the sale?
So if there is a change in ownership, there's SBA guidance regarding how that has to happen. We're still kind of looking at, and I've actually reached out, we're partnered with BDO. So I've already actually reached out kind of about this issue for how it impacts your loan if you have an asset sale that was completed going back prior. So please just reach out to us maybe with the specific details about that question, and we can make sure, since those situations are all very unique and individualized, that way we're making sure we're giving you the best advice.
Yeah, and in talking to some of my banker contacts, if there is a change in control or a sale like this contemplated, make sure you're and you have a PPP loan out there, make sure you're communicating with your bank, because there are items that you have to take care of and that are going to come up in the due diligence process regarding the PPP loan. Because I was surprised at some transactions that tried to close before actual guidance came out. Is there a time frame for operational software if it is billed monthly, for example?
So on the forgiveness side, this would be anything that would have been paid or incurred during your covered period. So anything that falls within that covered period would be eligible for forgiveness.
This is a good one too. Do HRSA provider relief funds to medical practices / hospitals impact any of this?
So with a lot of this, I would just make sure you're not double dipping any funds that are used for different programs. That's kind of like one of the biggest things, is if you're getting multiple fund sources, just make sure, I would keep a folder on each fund and document that what you're using for that fund, and document that it doesn't overlap, just to protect in case any of those, you know, one of the biggest things that you got to do is make sure you protect your business or your nonprofit or anything like that. So I would make sure you're taking those steps to document.
Thanks. We hired people during the year, so we don't have full year compensation for those people. Are we limited to the average compensation for the full year, or can we use the current payroll for the application?
You would, so it sounds like your payroll went up for 2020, so that would be the better period to use, but you would have to use that entire year and take the average and multiply that by 2.5% to come up with your loan amount.
Can Lumsden add a letter of support on the forgiveness application from the borrower?
I'm not sure.
Yeah, contact your service provider at Lumsden and we'll talk to you about it. What is the additional guidance reason FTE count for PPP 1? And is there any discussion about FTE count for PPP 2 forgiveness?
Yeah, so those same components of PPP forgiveness for round one of keeping your FTEs, not reducing anybody's compensation below 25%. So all of those kind of restrictions and program rules are supposed to be applicable for PPP round two. The SBA is still pulling kind of documentation together, so that could change with future guidance. But yes, please, I would go forth and assume that those same rules for round one are going to apply regarding FTEs, because this is, you know, the Paycheck Protection Program. So it's designed to kind of keep people employed and keep people paid is ultimately the essence of the program.
When do you recommend we apply for PPP2? Right away to get in line, or wait for more guidance?
I would get in line, because these funds are first come, first serve. So you can do your best to interpret the guidance. There is an FAQ that protects us, you know, based on interpreting the guidance as best that we can. And, you know, even we might recognize that things might change. We might give an opinion about something and that later is clarified and we maybe gave the wrong thing. Luckily, that hasn't really happened too much, but I would say get in line because we don't know that these funds will be extended if they're exhausted.
Amen. And apply to the bank that you applied to with the first loan, because there it will be much easier, unless there's a real good reason not to. And just with that question and some of the comments we've made today too, I mean, accountants like black and white, and there's probably a lot of internal accountants on the call now for businesses out there and things like that. And with the PPP thing, it hasn't always been black and white. So it is out of our comfort zone. So we just, like we've been saying, you got to do your best. And I've probably operated in some of those areas where there's not a definitive answer, because I deal a lot with business development incentives, so various tax credit programs, and you have the tax credit program come out and then guidance comes out 4 or 5 years later saying you did everything wrong or you took a wrong position. So I'm a little more used to dealing with this stuff. And again, just make an educated guess, document your position and stick to it, and then we'll correct it later on if we get further guidance. That's all you can do. Next one, are the record retention rules you reviewed the same for those who have a PPP loan greater than $150,000?
Yeah, so you want to make sure you're keeping your records. I think it's longer on the original PPP loan. I can't remember off the top of my head. Jenna, can you? I think it's maybe like 6 or 7 years off the top of my mind. So I think it is longer than the simplified application. But the biggest thing is just make sure you're keeping those records. You know, if you're worried about keeping them, if anything were to happen, you can always feel free to send them to us and we'll add it to your file. And, you know, if we're helping you with a PPP forgiveness, we'll be keeping those records for the period required as well, just in case you ever need them. And we're still your service provider, we can provide them to you as well.
If you're 100% owned by a foreign private equity firm, would you be eligible for PPP round 2 loan?
I would want to double check the rules on the foreign private equity firms. So feel free to reach out to me after that. I can't remember off the top of my head. Jenna, can you?
I can. I would want to look into it a little bit more before giving a definitive answer.
In the first round, it was if you were foreign owned, you were okay as long as your employees were based in the US, right?
Mm-hmm. But I know
that was a big question.
And why I'm kind of hesitant is there were some rules regarding foreign stuff that came out after, and luckily a lot of our clients had applied for forgiveness, but I know that there were some that would have no longer been eligible based on guidance, but because there is that protector that you apply based on the guidance available at the time, they are still able to keep their PPP loan. So I would just kind of want to go through those details again to refresh myself.
Yep. So contact us, we can talk. That's definitely an area that I know there was a lot of confusion, and Mark Janello, it's our international tax partner, was working hand in hand with the banks to try and figure all that stuff out. And I think the answer changed about 5 times until guidance came out. Does each forgiveness application stand on its own? If one PPP loan is less than 150K, but the other is greater than 150,000, do you file a short form forgiveness application for one and a long one for the next one?
I believe that's how it will work, unless affiliates are over 2 million, because I know for just the $50,000 application that was released, you could not use that if in the aggregate you were over 2 million. So I'm willing to bet that that will be the same again.
Is a small real estate LLC with no employees eligible? No, it is not. Follow up, what if your 501c3 organization is publicly supported by the institution for payroll and other operating costs, and all costs reimbursed by the 501c3 organization? Thank you. Maybe contact us and we'll talk about that one later.
Yes.
Sorry, I'm trying to go a little quicker here. We got 19 open. With the original PPP loan, an 8-week period was used. As we know, it was then expanded to 24-week period to exhaust the funds. We were able to spend all of our funding within the first 8-week period. Are we eligible to go back for additional funding with our original loan to cover 24 weeks?
So there was no change to how the funding was computed. It was just how long the funding could be used for. So if you use the funds in 8 weeks, or whether you use the funds in 24 weeks, it didn't change the amount of funds that you got. So I think that will answer that question.
For the second round, once you have received the money, you have for 24 weeks to spend it. As a seasonal business owner, we don't open till May. Does the 24 weeks start once I receive the money?
It does. It starts the day it's deposited into your account. I don't think there's any sort of deferral on that.
What is your guidance for the economic necessity certification? If you had an increase in taxable income in 20 versus 19, who knows if there will be another shutdown in 21 causing us to need cash to meet payroll requirements? Well, if you have taxable income that's more in 20 than 19, I'm guessing your gross receipts are not down 25%, so you're ineligible anyways. If I'm wrong about that guess, contact us and we will talk further, please. Have the FTE benchmark periods changed?
As of right now, I don't believe so.
When does the window close to apply for the second PPP loan? Is it when the funds run out?
March 31st or when the funds run out. I mean, I will say that I would apply and get in line, but maybe, if you're like that seasonal business, that's not going to open up, and who knows whether it really makes sense to actually get the PPP loan. I will say, starting January 20th, everything's going to switch to mostly be controlled by Democrats. So who knows, we could get more funding, but I would not if you need the money now, I would not drag your feet on applying, because we don't have a guarantee that there will be any more funds added.
The first PPP was based on retention of FTEs. Is there any guidance if neither your revenue or FTE count was affected because of COVID?
So there's nothing that really describes why your revenues dropped. Your revenues have to drop to be eligible for PPP round 2, but then those, as we understand it right now, those FTE retention rules and the salary retention rules are still applicable for this round as well.
Is the necessity questionnaire still required?
For loans over 2 million, yes, and that you can find that. Please reach out to us if you need it, and we will happily send that to you.
Another question about a non-calendar quarter. We already answered this one. If you have further questions or want to talk further, please contact us. We'd be glad to have a conversation, and hopefully that question will be answered by guidance in the near future. If you formed a sole proprietor business and started operations in January of 2020, is there guidance on meeting the gross receipts comparison? If you don't have 19 figures, I think the answer is you're not eligible, but Meg, Jenna, do you?
Nope, you can use Q1 2020. So as long as you're in existence by February 15th, 2020, there are rules for that. And I believe it's just based on Q1 2020, but reach out to us and I'll definitely get those rules. I just haven't really had to apply them yet, but I think it's just Q1 2020. You would compare your other quarters to.
See, Megan knows everything. What if you are a 501, or I'm sorry, what if you are a 503c3? This is a Jenna question. Without tax returns, non-calendar fiscal year, you thinking you can use the fiscal year quarter?
Yes, I would think that follows the same thought process that we've been talking about.
If no revenue received in 19 and no revenue in 2020, 25% dip in gross receipts is not possible. Would this still be eligible?
Based on our understanding, no, you have to have gross receipts in order to be eligible, unfortunately. So I know this kind of hurts some of our startups that are still sort of in like development type phases, especially if that's been slowed down due to the pandemic. Unfortunately, right now, I don't really see a way that you would be able to qualify for more funds.
Maybe there was going to be guidance coming out to say something. We'll see. I don't know. I know there was a lot of, I think a lot of startup companies got together and got guidance issued in the first round about whether or not they were eligible because they had access to private equity and things like that. And I think that we got a pretty favorable result in the end. So maybe something like that will happen again. How is housing cooperative defined? Thank you.
That one I'll take a
Go ahead.
deeper dive
that
into and get a good definition for you if you want to reach out.
That's what I was going to say. Zero gross receipts include gross receipts include intercompany transactions, question mark.
Nope, the IFR specifically says that you would exclude intercompany transactions.
Original PPP, if you have not filed your forgiveness application or have not received confirmation your loan is forgiven from the SBA/bank, will you then need to wait to file your tax returns to finalize what is going on with the taxability of the loan? Ooh, this is a good question.
Nope, the loan's not taxable, so you don't have to worry about your tax return for that purpose.
If you use 2019 payroll to calculate the loan amount, will you also be subject to the same headcount using 2019 for loan forgiveness? So we need to get back to 2019 headcount for loan forgiveness.
I think for this, we need to kind of see a little bit more guidance of how this forgiveness is going to work regarding the FTE count, whether it's going to be based on 2019 or 2020. I don't think your loan amount would really be dependent on the FTE guidance because those two were not, you could still choose your loan, loan could have still been based on 2019 and you chose January and February 2020 for your head count for the first round of forgiveness. So I don't think they're tied together.
Thanks. If you have used employee retention credits, are you not allowed to apply for PPP loan?
You can still apply. We just caution that you cannot double dip and use the same expenses for forgiveness and the credit.
And this was, you couldn't do it until December 27th. Right. So don't worry that you missed something in the past. It was just recently changed to allow to do both ERC and PPP.
Yep. For a long time, we thought there was one or the other, not both. So yeah, great point, Meg. Sounds like the loan forgiveness application for loans under 150K is different, but is the second round of PPP loan application for loans under 150K different?
No, it'll follow the same application process.
Look at that. We're 12 minutes over and we still have 107 people on here. That's pretty good. Will safe harbor provisions apply again to PPP2?
I believe
we're almost done.
We're still kind of waiting for some guidance on how forgiveness will work, but my guess is that there will be safe harbors as well, and they will apply for PPP too.
Thanks, and go Bills. We got two more. For the, I thought that Maria would yell at me if I wore this hat the whole presentation, so I waited towards the end. For the second,
never, Corey, never.
For the second PPP, if you are cash basis for tax purposes and do not have audited, reviewed, or compiled financial statements, can you be cash basis for eligibility?
Yes, so if you don't have financial statements, I would go with, whatever you would usually then report your tax return and your, like, whether you're using QuickBooks or anything like that, I would just follow the same treatment.
Thanks. Is there a cap, like the first round of PPP, that each employee can make through the second round of PPP?
Yep, it's the same cap of the max on an annual basis of $100,000. So you would, if someone makes over 100 grand, you would subject them to the cap and then divide that by 12 and multiply by 2.5 if you are not a restaurant or hotel to get the max loan. Did we make it through them all?
We did. We made them through all.
Well, thank you, everyone. And I thought I could leave you with a little bit of music.
The division is ours, and next, the world. Okay, let's go Bills on 3. Hut, hut, ah!
Everybody check it out. That's the new Let's Go Bills song. Hopefully there'll be another one this week. We'll see. Does anybody got anything else? Speak now or forever hold your peace.
Just remember, everyone, to please complete the survey as you exit the webinar. And again, you will be getting an email from us with the link to the recording and the slide deck. So special thanks to Megan, Jenna, and Corey. And as always, if you have any questions, simply reach out to Lumsden and McCormick. All of our contact information is in the emails that were sent to all of you. Again, have a great day and go Bills.